Bim. Folks, Nick Masunda here with video number 12. I'm going to be talking about how to get life insurance when you've got diabetes in this video. Why you should listen to me: I've been working in life insurance and personal finance for 7 years, and I've actually helped quite a lot of clients get life insurance who had diabetes. So in this video, basically going to talk about what life insurance is, the process of getting life insurance, how your health impacts that, specifically diabetes, and some of the more favorable insurers for diabetes. And eventually I'm going to talk about a unique way of paying the standard rate for life insurance even when you've had a diabetes diagnosis. Okay. With that being said, what is life insurance? First of all, life insurance, it's a policy that pays out a lump sum payment if you die. Okay, you're generally going to be covered for any form of death. Even suicide is covered with life insurance policies, which always surprises a lot of people. Usually not for the first 13 months, but eventually it covers any form of death wherever you are on the planet. Okay, and those terms are pretty typical for any life insurance policy that you might come across in Australia. Now, when you apply for a policy, the insurer is going to assess your medical history and your health. Okay, the more likely you are to pass away based on your health, the more likely you are to pay more for your policy. Okay, so in certain circumstances, if the increased risk is high enough, they will charge you what they call a loading. Okay, that's just you're paying more. Now, the smallest loading is going to be 50%, and then they usually move up in 25% increments, so 50, 75, 100, etc. Eventually the loadings get so high, I think it's maybe around the 300% mark, depending on the insurer, where the insurer won't cover you at all. They'll just decline your application. Okay, so that's loadings. With diabetes, okay, so quick explanation of what diabetes is. It's a condition where you have elevated blood sugar. Okay, there's two types of diabetes. Diabetes type 1 is an issue where the pancreas doesn't produce enough insulin. It usually starts younger when you're earlier in life. And then you've got diabetes type 2, which is more impacted by lifestyle and diet. Okay, that's more of a metabolic issue where you're producing insulin, but it's not pulling the sugar out of your blood and into the cells where it's meant to be. Okay. Now, the first thing to understand, I guess, the first bitter pill to swallow if you have diabetes is that even if you have perfect control of your diabetes to the point where your markers are even better than someone who never had a diabetes diagnosis, you're still going to pay a 50% loading, the smallest loading. Okay, so that's the first thing to keep in mind, with very few exceptions, which I'll talk about a bit later. But even if you have perfect control, a 50% loading is likely. Then if your control is poorer, then on a sliding scale, that loading is going to increase 75, 100, 125%, etc. So what are the things that impact the severity of your diabetes? What are the insurers going to look at? Okay, first and foremost, they're going to look at your HbA1c, which is a protein that interacts with the sugar in your blood. Usually diabetics are getting this measured every 3 to 6 months through a blood test with their doctor. Okay, if this is high, you're going to pay higher loadings, right? Usually the insurers want to see that it's below 7. That would be generally considered good control. They're also going to look at how long you've had diabetes for. This is probably more relevant for people with type 1 diabetes. Type 1 diabetes is generally considered worse than type 2 in the insurance world. So it must impact mortality more than type 2. But yeah, if you've had type 1 diabetes, the longer you've had it for, the more likely you are to pay a higher loading. Third thing is going to be complications. Complications like tingling fingers and toes, eyesight issues, kidney issues. If you've had complications, it's going to be particularly challenging for you to get life insurance. The loadings are going to be particularly high, depending on how much of an impact the diabetes has had on these complications. So something to keep in mind. So how do you avoid loadings? Okay, so first and foremost, some insurers have more favorable underwriting guidelines for diabetes than others. Okay, you could go and present to one insurer and get a 50% loading and present the exact same specifications or markers, profile, if you like, to another insurer and get 100% loading. Right. So first and foremost, some insurers are more favorable than others. Zurich, OnePath, MLC, in my experience, have tended to give better outcomes for diabetes. AIA, poorer outcomes, as a few examples of insurers there. Now, and this is in the retail insurance world. So I should explain how insurers distribute their policies in Australia. There's three main ways, okay? There's direct to customer. Obviously, you contact the insurer directly online or over the phone, purchase a policy. There's through superannuation. So you get the policy via your super fund. And then there's retail insurance. Retail insurance is where I've had the most experience. Retail insurance is when the insurer distributes the policies through an advisor. So financial advisor, insurance advisor, etc. So in the retail insurance world, I have seen arrangements where an insurer will actually waive small loadings under certain circumstances for particular advice businesses. Okay. These are usually businesses that specialize in insurance and therefore doing a lot of volume. So the insurers want to keep that volume flowing, so they offer good deals to the advice business. I've specifically seen this with TAL and with OnePath, okay, waiving up to 50% and 75% loadings respectively. So this is very uncommon though, to be clear. They're not offering this arrangement to a lot of advice businesses. Okay, so small financial advice firms who aren't doing a lot of volume probably not going to be able to get access to this. So yeah, look, I guess in summary, if you have diabetes and you're looking to get life insurance, first and foremost, you want to have as good control as possible when you apply for the policy. You want to engage an insurer that has favorable underwriting guidelines so that they don't charge you an overly large loading. And then if possible, if you can find an advice business that has this arrangement with the insurer where they're willing to waive loadings, 100%, that would be where you would want to take up the policy, because you may be able to pay the same rate as someone who's perfectly healthy, okay, which is, like I said, very, very uncommon arrangement. So yeah, thanks for watching, guys.